Hi, everybody. Welcome back to the second episode of Weekly Market Recap and Update with Joseph Virgilio and Irfan Khan, my business partner. For those who don't know me, I am a hedge fund manager with 25 years plus experience on Wall Street, managing long-short equity funds, and I'm known for being the first fund manager to launch a sustainability-focused fund back in 2004. So I'm considered kind of a grandfather of sustainable finance. Statistic of the week, 3.5. So the feeling of loss is 3.5 greater than the feeling of gain when you invest in the stock market, which this pushes you to do things that you're not supposed to do. Keep that in mind. Isn't that right?
Wow. That's quite some statistic. And happy Sunday, everyone. I mean, it's a very interesting insight into behavioral economics.
Absolutely, there's a statistic that comes out of research in the behavioral economics field, which studies basically the way we interpret data. So data is important, but also how we interpret data is very important. I remember back in 2000, for example, there was a stock called MCI, which was a telecom services, and the stock symbol was I forgot the stock symbol, but there was another stock called Mass Mutual, an insurance company, which had a ticker MSCI. And every time there was bad news on MCI, the telecom company, this MCI this ticker would get crushed. Just to show you, behavioral economics studies how we move, what we do with what we know.
Psychology is always a huge factor in how we govern how it governs our decisions in terms of investment, isn't it?
Oh, absolutely. It's all psychology. That's going back to the statistic that I gave. When you're 3.5 times, when you feel pain 3.5 times more than you actually feel the feeling of gain, you end up doing things that you're not supposed to do. If people buy a stock at 10 and then they sell it at 8 because it went down 20%, but if you bought it at 10, you liked that price, you liked 10, why are you selling it at 8? You should buy more of it, you should love it at 8. Things like that.
Oh, well. Anyway, moving on. We had unemployment statistics released this week, right?
Yeah, we had some. The unemployment report was not released because hopefully it's the last time that we have a lack of data because the government shut down last month. But we had private ADP and some other numbers, or they're not so bad. Really not so bad. But we're definitely in an economy where there's no hiring and no firing. It's just a complete freeze in every sense. That's because there's uncertainty still lingering, tariff lingering, effect lingering over our heads, inflation, which leads me to the next point, which would be the Fed rate cut this week. It's 95% priced in, so we think the rate cut is going to happen. That's a 0.25 percentage point. But going back to unemployment, something that really caught my eye. We had a really good holiday season. Holiday spending season. I mean, Thanksgiving, Black Friday, and Cyber Monday. But the one thing that stood out to me is, we hit a new record, in terms of spending, but $1 billion+ of these purchases was done through buy now and pay later services, which carry anything between 10 and 35% interest. So to me, something is happening. I mean, when you hear Donald Trump going out saying, "Oh, affordability is a scam created by the Democrats," the Americans are saying a completely different thing. And I mean, it's pretty tough out there when you have $1 billion of goods purchased on buy now pay later programs. Something is happening here, and we should pay close attention.
Absolutely. Wow. I mean, if people are willing to incur in interest rates, anywhere from 10 to 35%, that is definitely saying a lot.
Well,
sure.
to start with, if you don't have really good credit in the United States, you can incur 30% credit on your credit cards. I mean, it's just the way it is. There's no cap on it. I think it's 33%, the highest I've heard. but I'm sure there's probably something else out there. But no, I remember when I didn't have any credit in the U.S., I had very high credit card interest payments on 20%, 25%. So there were those who had even 30%, like my ex-girlfriend at the time. She was, she had some debts, and the more debt she had, the more interest payments would go up. So,
which is a little different to how it usually happens in Europe, right? I mean, you don't have this kind of
Europe. You have there's no. America is very predatory. In Europe, they're capped at a certain rate. So no, America, it's crazy.
Yeah. Wow. So, well, anyway, so having said that, it's the 7th of December today. We're coming up really close to the end of the year. What insights can you share versus what we talked about last week?
Right. So we saw the market, the tech sector especially, rebound. Many of the AI-related stocks have actually shown some support, and Friday was a really good day for them. The day before that as well. It looks like we're on track for a year-end rally. Fear of missing out, FOMO, is what a lot of hedge fund managers, portfolio managers, and fund managers, mutual fund managers, have underperformed their benchmarks or the S&P 500 in general, and so what they're going to do is probably load up right now so that they can show their investors at year-end that they were participating in some of the big names such as NVIDIA and whatnot. So I think that there's going to be a rally this month with the Santa Claus rally between Christmas and New Year's Eve.
Okay, so just to remind our listeners and watchers, between now and the end of the year, when are markets going to be shut?
On Christmas Day, Christmas Day and New Year's Eve.
Okay, so
yeah, but I believe the 26th is half a day. I believe.
Okay, good to know.
I can't remember. Despite the 25 years of Wall Street experiences, I always have to look it up sometimes myself. Just to make sure. And,
shall we dive a little bit into some particular stocks?
Yes, I wanted to talk about that because we just touched on NVIDIA and AI. A company that I really love, and this is one of the beautiful applications about AI is Tempus AI. Tempus is a company that basically uses artificial intelligence in fields of medical fields of oncology and whatnot. So, and I'm following this company very closely. I have it in my portfolio, and I think it's going to be revolutionary. These guys have millions of case studies. Tempus has millions of case studies of cancer treatments, and they can shorten and pinpoint in much faster the type of cure a person needs once a specific cancer is identified. So, if basically it speeds up the pinpointing of the medicines that a specific patient needs to take in order to either overcome or extend his life or go into remission and whatnot. So I like Tempus AI. The ticker is TEM for anybody who wants to take a look. They're not profitable yet. They're on their way, and I like them very much.
Well, I mean, correct me if I'm wrong, but typically such companies, to really make a difference and start becoming profitable, first you need to really invest a lot of money, right? So it is reasonable to expect them to only start becoming profitable in the medium to long run, right?
Yeah, but think of it this way: you have AI is going to disrupt a lot of work, jobs, but on the other hand, look at what it can do for people who are sick. Right, so Tempus is addressing that, and I like that. So on one hand, you have Tempus AI doing that. On the other hand, you have the sector as a whole, which will dismantle a big portion of job positions. But there's some good out of it, and I think spending money on the medical side of it, it's just very important in my view. My mom died of cancer, and I wish we had that technology, in 2009 when she passed away. and maybe she would have survived. Maybe she would have lived longer. And you know, so I'm personal. It's personal for me too. And obviously, I'm not going to get I'm not going to get attached to stock because of emotional issues. That's the last thing I'll do. But they're doing it right. So I'm long this company, and I believe in them.
That's great to know. That's great to know. Well, hopefully this is one of those things that can really disrupt things on many levels.
Yeah.
Is there anything else we would like to talk about now?
Bitcoin down 3% for the year. S&P 500 up 16. It's telling me something. Either Bitcoin has a big rally to do here at the end of the year, or it's going to be a long period of consolidation for all the cryptocurrencies, and especially Bitcoin, which is the most popular one. But these cryptocurrencies are remind me of the .com. You know, we talked about .com last week. The .com bubble. This is what it looked like. What it looks like now. A lot of these cryptocurrencies are going to be completely wiped out. They won't exist anymore, and we just have to see. There's going to be a filtration phase. We'll see. But funny enough, I was in a supermarket the other day, and I meet this. She was like maybe 40 years old, and I was at the bakery counter. And we started talking, and I said, "Well, I worked on Wall Street for 25 years." And she's like, "Oh, I'm an FX trader." I'm like, "Oh, wow, really? What bank do you work for? What currency do you trade? You G7, G5, G?" She looked at me. She's like, "What's that?" I'm like, "G7 economies." "Oh no, I do cryptocurrencies." I'm like, "Oh God." I know they're talking now. These people are
That's not exactly FX.
It's not FX. It's not FX. But I was like, Jesus Christ! This is now. It's gotten to this point where they think they're actually trading currencies. These fools. But okay, well.
To end in a big way, in fashion, when we talk about Netflix.
Oh yes, Netflix buying Warner Bros. I have a little bit of a problem with that. Nowadays, okay, so what I'm about to say, this premise. Nowadays, you can buy the current administration with some money. It's, you know, the U.S. has become a third world country in that regard. But I think that there's going to be some antitrust issues. They will become a powerhouse in the Hollywood movie, cinema, and home streaming, and they, the end of $15 a month for Netflix is coming. I mean, if they go through with this acquisition, they have all the pricing power they want.
Yeah, okay, well, maybe, I guess, good for investors in Netflix, not so good for Netflix customers.
Correct. Yeah.
Okay.
And I bought Netflix 3 years ago when it came down to $150 a share, and then I sold it once I doubled my money. I should have stuck with it, but it's not something, I'd rather be with what's changing the economy, and Netflix is just an entertainment company, for me.
Mm-hmm.
So that's it.
That's it. Okay. Well, that was a pretty information-packed session we had just now. I guess we shall wait and see what happens in this coming week, and we'll be back next Sunday with another market update.
Absolutely. Have a good weekend, everybody, or Sunday, at least whatever the remaining balance of the weekend is, and we'll speak next week.
Yeah.
Ciao, Irfan.
Take care, everyone. Bye.
Bye.